Okay, so we got cut off just as we are explaining the part of the motor vehicle where you've insured the motor vehicle and the motor vehicle was either written off or stolen, and you've insured the motor vehicle. And as we've elaborated with the motor vehicle, it's actually a denied supply in terms of its nature. However, if a motor vehicle is written off or stolen, in this instance, an insurance company then indemnifies you, and they indemnify you, say, 200,000 rands. In this instance, there would not be any VAT implications that arise because it's denied supplied as determined as per the tax norms. However, this only relates to a situation where the motor vehicle was either stolen or written off and you get indemnified. In this situation, you get 200,000. Therefore, you do not have any VAT implications. However, if the indemnity payment that you so received related to underlying costs, that would likely be relating to maintenance in the form of repairs, or your motor vehicle was damaged to a certain extent and it can still be repaired and it will still be a functional motor vehicle, then that gives rise to VAT consequences being applicable. And in that instance, you definitely have to account for VAT. You have to account for VAT in that instance. So what would happen is maybe you get indemnified 100,000 rands for the damage that your motor vehicle had, went through. So even though the motor vehicle in its nature is a denied supply, but underlying costs, which are now not relating to either the motor vehicle not being written off or stolen, the underlying nature of any other indemnity that you get, not in relation to these two preconditions, then it means that you have a denied supply for the indemnity payment that you would have received, and you'd have to recognize output VAT on that actual amount of the 100,000 indemnity that you would have received in that instance. So it's a very delicate matter when dealing with a motor vehicle. Just watch out for the precondition of that motor vehicle having been insured and it's either written off or stolen. In that circumstance, it does not give rise to any VAT taking precedence. Whereas if it's underlying costs that have to do with repairs or maintenance, therefore it attracts VAT output being recognized on the indemnity payment that you so likely would have received from the actual insurance company that you'd likely be getting indemnified by.